Nairametrics, creating wealth through information. And that's what we're about to give you right now. We're giving you information. And we do believe that that will give you the opportunity to create wealth. Whether you're in Nigeria, whether you've been fortunate or unfortunate to jackpot, because really, not everybody that jackpot is making it out there. Some of them are really regretting. So wherever it is you find yourself, whether you're cleaning toilets abroad or you're working in an office, whether it's a job you're okay with or not, you still need to learn about money. Especially if you're in a system where there's a bit more structure than Nigeria. Tune in right now. Don't change it. Don't feel you're going to talk about Naira. I earn dollars or pounds. No, you need to talk about this. We have a homegrown professional who is so proud of his roots, who is excited about the potential of Nigeria, and do look forward to the day we're able to maximize this potential. It's the voice you hear every time on the Everyday Morning Matters, and he's here again in the studio. Wade, morning to you.
Morning, Kaide. Great to be here.
Yes. And your prophecies came to pass.
Which ones?
The NPR.
Yeah. I told you we're heading to 25%.
Yeah.
That was even before they moved the 400 basis point. Mm-hmm. So we're almost there. So
gradually.
I guess we're there now.
We're
but the exchange rate too is dropping. But like my partner Ogodre will always say, I can't remember the name, but he says there's a dilemma when you have to juggle interest rates and exchange rate. One has to suffer for the other.
Interesting. Wow. But okay, that's interesting though, because
you can't control.
You can't control both. Okay, because so you can't control, but because I'm just looking at it that we hear some countries do have a 4% interest rate, right? I think UK increased to 3 point something recently, or is it 4?
About that,
yeah. And the exchange rate is still strong. Can we?
Where are you comparing it? Are you comparing like for like?
Like, apples and oranges,
mango baskets.
I'm just looking at the fact that so now our interest rate is suffering while our exchange rate is gaining momentum, getting stronger. Can we get to a time where maybe it drops? We'll talk about that later, but it drops, and we have the interest rate also dropping.
So a number of things. If you look at a country like America today, interest rates are quite high. So why are they driving?
How high are they?
5% is high in America.
Okay, I was shocked. I said, is it our own?
That's high.
But no, they shouldn't. So don't compare apples.
The world is asking Europe and America to drop their interest rates to 1%.
Why are they not telling us to drop our own?
So why? So many. If you, like my partner will always say, and also
you're trying to choose your words rightly. You don't want to.
I'm trying to reiterate what he's saying.
Okay.
Is about the investments and how do you gather investments into a country. It's not your exchange rate that brings the investments. It's part of it, but it's also forces of demand and supply, but also what interests you in putting an investment in a country. Exchange rates will bring the money so that you can invest, and then you get reasonable interest returns, and that's what we see. So you see in America has been, over the last 8 years, even under Donald Trump, more build America. Even under this current administration, more build America, bring more
investment,
more investment into infrastructure and so on. So it makes absolute sense for me to go, and if I have $100 billion to go invest in America and build some form of infrastructure, with the benefits you get, whether it's what you call sustainable money, or even your general investment, just depositing the 1 million at 5%.
But okay, and that's what comes, and that's the question.
You would see that every time that a number of these things happen, they leave the markets to determine the exchange rate prices. And when the American dollar is getting too strong against other currencies, what happens? The government tries to, or the reserves try to, push a few buttons here and there so that it can stabilize and say, okay, we need to drive this investment without really touching the interest rates. Everybody was expecting that at the end of March, with the jobs reports, first quarter looking very excellent, we're looking at interest rates in Europe and America going down to where it used to be, so that people can take monies to go invest in other places. But we've heard the Federal Reserves, the European Union Bank, the Bank of England tell you that they don't foresee this till June, which is the end of second quarter, and not because of anything, but because they're still battling with inflation. It's not as bad as it used to be, but those are things that they're considering.
All right. And you see, that's why I say that I think it's time for him to go study economics or something financial, and a short course on that, because I get easily confused. That's why I don't dabble into it. Now, if you tell me that I have $1 million, right? I have a country that is giving you 5% interest rates. I have another country that's giving you 25% interest rate. As a pedestrian like me, I will consider the 25% interest rate, which is Nigeria. Shouldn't Nigeria be attracting more investments because we have a higher interest rate?
So, a number of things when you consider investments. Can I get my money back? That's one. How quickly can I get my money back? That's the second one. Those are two major criteria that you have to consider. So you could take it to, and I'm sure you, growing up in Nigeria, we've seen a number of schemes, and which some people will say are Ponzi schemes. Don't worry, I don't want to mention names on air, so I don't give them cheap publicity. There are a number of them are dead now. But growing up in late 80s, early 90s, there was one that it was a finance house. You wondered whether they were car dealers or actually financial dealers, and so on. Not too long ago, in the 2000s, and
triple consonant words. Yeah, no, just triple consonants.
And you find out, and someone tells you, "Oh, don't worry. In 90 days they give you 30% interest upfront." These are things. Those are red flags for anybody who wants to invest. They are simple red flags when the interest rate is too good to be true.
Wow.
It is a red flag. What kind of business are they doing? Yeah, some people tell you they're traders, they're merchants. Today here, I heard on the news today that the FMIU, the financial of the police, says, a lot of terrorist activities are being funded by FMIU. Are being funded through crowdfunding. So when something seems too good to be true, then there is a high suspicion of untruth in it. Very high suspicion. And these are things that you have to watch out for. What are the red flags? Interest rates are too high. If the average interest rate in the economy is 10% and someone is giving you 30% every month or every 90 days, wow, it's enticing and inviting. But should you? I don't think so. How do you understand the kind of investments you want to go to? Tested and trusted, your traditional financial institutions, the new technology institutions that have built a name, but even then everybody does struggle, because you're competing for limited amounts of money in the economy.
So for a layman like me, what you're saying, correct me if I'm wrong, is that Nigeria's 25%, approximately, a 25% interest rate to a global investor feels more like a Ponzi scheme.
I'm not saying that. What I'm saying is you need to look at all the other factors that would push you to say, okay, this investment makes sense at 25%. So you weigh your risk, or you speak to the analyst who understands it better. And the first question I ask is, if I put in my 1 million, can I get it back when I'm ready to get it back? Even the interest, I can get paid the first month. Am I going to get paid the second month? So these are realities that we have to check on our tick off on our check boxes. Okay. So it's and even if I invest it, where is it going to? Which sector is it going to? Am I conversant with that sector? Because everybody is like I said, the wants are many, but those who have the resources to put into those things are not that much in terms of funds when you consider the economy.
All right. And is it possible that maybe global analysts might demarket a particular country or region in order to attract investment to another region, or maybe preferred investment destinations.
Oh yes, everybody's trying to, pull funds into investments either in their country. You would see countries advertising on their tax incentives.
Okay.
Come and invest here. For the first 10 years, no taxes. But let's remember that when you employ people there, you're going to pay personal income taxes and remit them to the government, and which are a number of things that other incentives that come in. Yeah, so sometimes they do that. But the question for you as an investor is looking at the market, how politically stable is the market? What's the ease of doing business in that market? What's the ease of collecting your returns at a point in time when you decide that you want to divest from that market? Okay. Those are three major criteria for me personally that you need to look at. So it's not just about the interest rates. Like I said, if it's too good to be true, then it's too good to be true. And let's also remember that in terms of attracting those kind of fund, or attracting funding, sometimes for those who are trying to attract the funding, they need to pay an initial cost. So what you call market loss strategy to get into the market. So how quickly can I get those funds? You get stabilized. There's enough funds in the system to generate new funds, and then you start to see that there is confidence in that market. People, when rates start to drop, people are not complaining because they can see that the returns from other areas of investment are bringing adequate returns in comparison to it. So the short-term players play that short-term game, make enough money, and then they could come back later at more saner climbs when they feel that, okay, there is stability in that system, and now if we put money into that system for a long term, we know what our returns will be without having any political issues, that could change policies and results more like.
All right. And we see that, okay, I just, when you were speaking, I checked, I saw Ghana 29%, Egypt about 20, let me just take that again, 27 or so percent. South Africa shockingly had about 8% approximately. And one will wonder, South Africa they're quite big on manufacturing. Egypt, I think they're also big on manufacturing, hasn't they? To an extent, yeah.
They've had their issues.
Yeah. So, as a country, I'm using that to ask this question, as a build-up to this question. As a country, looking at where we are, what will make, I know you're talking about investment, but what will make our interest rates drop? And is it beneficial to the people?
First, inflation has to go down. Has to go down drastically. If you want to drive investment into your country, especially for what you call emerging markets like Nigeria, we've been on emerging market status for a while now, but that's fine.
When will we finally emerge?
We will emerge someday. When you look at emerging markets, so what people are looking at is in terms of single-digit inflation rates for you to grow the kind of economy, for you to grow your GDP in double digits. Why? Because more money is coming. Okay. Monies are turned around quicker. You have the population that drives the consumption. That's one. Secondly, will be ability of consumers to affordability of goods and services.
More standard of living.
Goods and services. Yeah, okay. So generally your per capita income, your standard of living. If you have a large population and the average the average per capita income is low, then you would see this kind of things. Will investments come there? Maybe because of cheap labor, or relatively cheap labor. I hate to use that word, cheap labor. Relatively
comparative
labor wages, or wages for labor. And these are things that at the end of the day, people consider. To put an investment in a country, there are a number of factors. It's not just whether the interest rate is high or the returns are high. Returns are very important, but it's also about, okay, so how do I get my returns to be that high? Do I get requisite skills at affordable prices? Do I have that market for the standard of living of the people to be able to afford this good or service, or this product or service? Where some of those things don't tick off, then you start to find out that people will tell you, you know what, let's go to other markets. Maybe they don't have that kind of population, but they can afford it. So even if we charge a slightly higher price, then we should be able to make some more money than going somewhere where I produce something. And a number of things: infrastructure, power, logistics, ability to move products from one point to the other, service provision, and service disruption. So many factors weigh in when you're considering investments.
And it's deeper, and that ties into how Nigeria has been classified when we talk of multi-dimensional poverty. A lot of people think its ability to feed, it has to be access to basic needs, education, health, and all that. And really, I get concerned. I've heard from credible sources say that Lagos has one of the best healthcare systems in Nigeria, and I get worried when I hear that, because we complain about not having certain things in Lagos, and if you're saying this is one of the best, then I just pity people in other states who don't have half of what we have in Lagos. It means, I'm saying this to say, if we're considering all this, infrastructure, standard of living, then we have a long way to go to really stabilize and draw in, the right amount of investors, and even make Nigerians begin to invest more in Nigeria. Anyway, I haven't said that. You spoke about it at length about the influence of standard of living and per capita income as one of the ways, drivers for investors to the nation. And we've heard figures being thrown around: 500,000, 200,000 naira minimum wage. Let's start with a 200,000 naira minimum wage. Will that in any way increase the per capita income, provide better standard of living, and just reduce the multidimensionality of our poverty?
So, a few things. Yes, it should. Secondly, would it increase the volume of money supply in the system? Because the question for me, or the question for a number of people, will be, how much more money are you generating? Are you with me to be able to afford that? Are you just, so if you're growing the way, or revenues are being made, then yes, it does make huge sense. I do think that the disparity between private and public sector wages shouldn't be more than 15-20%, because we're all buying the same market. And then thirdly would also be, how are you funding this? If you're funding it through increased revenue generation, then you don't have a problem. But if you're going to fund it through debt, then
additional
loans, then you have a challenge, because you are going to pay for spending money that is not generating new products really, and creating new wealth, while the production still basically will remain the same. I remember I was too young then, and I remember a number of people saying that it was in the 70s, after the Udoji panel, and wages skyrocketed, and a number of people, and then there were the quotes of, oh, we have too much money, that and that for me is because you haven't considered the ripple effects of a number of things. Yes, wages should go up. I do think that there should be disparity. I listened to a talk some time back, and the man was saying that I'll mention the country so that we can get some context about it. In Singapore, it's part of the rules that the public sector and the private sector wages disparity is not more than 15%. And the reason is simple: it helps to reduce the level of corruption in a system. Why? Because we're all buying a market. And when people start to think about it from that perspective, then it makes some form of logical sense for you to say, you know what, if those in the public sector at entry level are earning 60,000, level worker in the private sector is earning 80,000, for instance, let's say a driver and that kind of thing, they all buy in the same market.
Yeah.
But if he's earning 30,000 and the driver in the private sector is earning 70,000, that's twice the amount of money that the public sector is. But they all buy in the same market. So if prices go up, what happens? How does it affect Mr. A or Mr. B? So those are things I think we should start looking at in terms of minimum wage. And in looking at minimum wage, let's remember that minimum wage is not just about government workers. It also has to translate into government projects with whether it's PPPs. How do you price those who come and provide services for you? Building a government infrastructure, it should be based on the minimum wage structure, meaning that if I go and work on a project that is being done by private sector on behalf of infrastructure that is PPP, all wages across board should be minimum wage base, and minimum wage is not just the bottom line. Minimum wage cuts across all the levels or cadres of employment in public sector. So if you are employing for instance, a project manager from a project manager who is managing a project on that side, you should consider the fact that project manager level is maybe like a senior manager or something, and it should tie into the ranks of minimum wage structure of the government.
Yeah.
So that's the pricing that should come in. It gives you a better reflection, and so on.
And so on. All right. Now, we see we're not see it, but we see the impact of what the CBN has been doing over the past 1 month. You were asking why have another meeting just a month afterwards. It could have been done quarterly or at least for any reason 2 months interval. But with what has been done right now, we see an increase in the interest rate. We see a drop in the forex. One would wonder, as a Nigerian, how low do you think a naira, or how much of how high can a naira gain? As in, we're at 1.3 right now.
I must have a crystal ball.
No, based on all what has been done right now, what do you see happening? Do you see a steady fall? Do you think it will plateau at some point? And at what point do you think it will plateau?
I believe it will plateau at some point.
Yes.
I don't know at what point it's going to plateau, but like we've continued to maintain at Nairametrics is stability first. Are we seeing stability in the market? To a certain extent, yes. And that stability has to transcend over a period of time for you to start to see the effects on the market. Why? Because cost of replacements should start going down, which is how you value new stocks and so on based on the old stock. And with that, if the cost of replacement goes down, it means that you should be able to increase generally. So if you were buying at 1.6 before and you're buying at 1.3 today, it means the 300 naira extra on it that you've sold at 1.7, the 400 naira extra on it, you can put it back into your business. That's about a quarter of the exchange rate. So you should be able to get some additional 25% of goods to put into the market and drop the prices, because if the supply goes higher and then it can meet the demand, then prices will start to fall. So these are basic economic theories that we're looking at and saying, but where it will plateau, I have no idea. I don't have a crystal ball, and I'm not the CBN governor. Even the CBN governor cannot tell you where it will plateau. It will just tell you that the availability of funds into the market would continue to drive the exchange rate to where it should be in terms of value. Right. And that's
but, okay, so as a Nigerian now who's touched up with the way Naira was behaving, or has been behaving, or had been behaving over the past few months, particularly, I have been able to stash up, let's see, $3,000, for example. And with what is happening in the Naira now, do you think I should change it back right now and cut my losses, or should I continue? Should I leave it in in the forex? Because maybe it was 1.9 and I was excited that it's going to 2,000.
So are you an FX trader?
No, there are a lot of Nigerians who do that.
So you were just being speculative about it.
Yes.
It depends on you. You can keep it and say, if you have the resources to hold on to it, then hold on to it. It might come in handy if you decide to start a new business and invest it into it.
No, okay. The reason I'm asking this, you know where I'm going, right? You know,
that's why I'm taking my time.
You're taking your time to be all right.
So that's one part. On the other part, you could decide that, well, I need the money now. Like we continually said in Nairametrics, spend now, save later. Cut your losses and move on. It's part of business. It's part of you taking a risk. And if you've taken that risk, you bought at 1.6 and it's dropped now to 1.3. I'm not telling you to go and sell it immediately. Please don't say Nairametrics said. No, I'm just telling you, weigh your options, look at your financial portfolio and decide. It's a decision you have to make. Some win, some lose. But let's remember that when the markets are going down, it's those who enter at the tail end usually turn out to be the losers.
All right. Wow. What a way to wrap it up for today. And so right now, how should an average Nigerian feel who's been concerned about how the economy is running, seeing what is being done by the CBN? They say they're collaborating with other departments and agencies and institutions, government-owned institutions. What level of hope should that person have? That might be a bit
renewed one. I think I'll just end it.
You just ended that way, all right. So on that note, that renewed hope note, we draw the curtain on Everyday Money Matters.